While the world focuses on the mega IPO season out in the US right now, we dug through our market to uncover 3 ASX stocks that recently IPO'd, which you can buy much cheaper today. But that's not the best part, because these stocks have the potential to skyrocket next, and we'll show you exactly what you need to look for before it happens. Backed by Australia's leading government-accredited share trading education and insights that are sought after by major media outlets Australia-wide, I am Philip Tortevsky, joined by senior analyst Pedro Banales, and we are Wealth Within. Good evening.
Good evening, Phil. Great to be back with you. Let's see if we can pick some winners.
Yes, all right. Well, let's do just that. Now, first up is Guzman and Gomez. So on the screen is the chart of GYG. And Pedro, this is going to be an interesting one today, because there is all this hype around the SpaceX IPO, all the mega IPOs about to come on the US. But one lesser known fact is that many IPOs 6 to 12 months after listing, you can find cheaper. And we're going to show you 3 really big companies on our market that are really showing interesting opportunities. And this one here, Guzman and Gomez, obviously, if you don't know, you've never eaten there. It's a fast food Mexican restaurant chain. Now, there's a few things to monitor before we get into the share price. Obviously, the keys to success here are the rapid store rollout, which they've got going, about 30 new store openings annually. They've got some, and also strong same growth sales growth, providing demand for the remaining, that the demand remains strong. Sorry, that was a bit of a tongue twister. But the biggest catalyst right now is the execution of these new store openings and higher profits following the exit from the loss-making US business. This part's huge, because they went into the US recently, and what companies often do is it may take some time before they switch gears and realize, okay, this may not work. It may not be popular to do it, but cutting losses quickly. And that's what Guzman and Gomez has done out in the US. They tried it. It wasn't working, quickly got rid of it. Focus is back on Australia. And right now the share price is becoming very, very interesting. You can see IPO price was back in June 24 at around $30. It had that initial spike that we often see. The market failed, and on the way up, you can see signs of the fail as price started to get shorter and shorter in terms of how strong it was wanting to push higher. Now, we flip to today, and I'll bring out the weekly chart just so you can take a closer look. Big selling back below the IPO price. The buyers tried on the week of October 25 to do something, literally instantly got sold off. Look where the open was. Buying pressure pulled up to 30 to the IPO price, instantly got sold off. The close for the week was down near the low. Fast forward to where we are today, looks very similar to what we've seen on the flip side to where the exhaustion happened, because the runs down are getting smaller. They're met by stronger buying, which is holding up. In fact, 10th of April, that close was super strong. Sellers tried to take price lower again, failed. So selling is getting weaker again. And this is the third example of selling getting even weaker, where we've seen some buyers come through last week. Obviously, the close is near the low. So, we'll continue to watch how this goes. But if we manage to hold above this particular low, which is the 22nd of May, then we've got 3 signs that we haven't had for a very long time, with prices going higher and sellers failing to take it lower. That, to me, is when you start looking for potential of a reversal. And so this is an interesting spot. Obviously, we've got this momentum line here that the stock is now at the juncture point. We've seen consolidation. One other thing that we're starting to see is a bunch of volume that is consistently being higher. You can see that if I draw just where it's come from this recent run, which is around through here, the volume is picking up. We've had a bit of volume come down on the last weeks of the 5th and 12th of June. That's coincided with the bearish action. So volume is supporting the bulls right now, albeit it is still very, very early. But I would expect if we break through this momentum, and it's telling what's going to come next, if we can take out $21, $22, which is the high of the 29th of May, then we really have a chance to push back into the IPO level at the very minimum, which offers upside of around 50%. And that is quite exciting. Now, if this story is going to change picture, and obviously now Guzman and Gomez getting rid of that deadwood, which we've seen a lot of companies do recently, get rid of some of that deadwood, and it's really helped their cause. This may be a long-term revaluation story, and we could see prices up in that $40 region where initial euphoria was. But let's not get too ahead of ourselves and get back to the IPO price, which still offers a very good risk reward for me. Pedro, anything else you want to add on this stock?
Yeah, this is looking nice, and it's one of those classic turnaround stories when a company really comes back and focuses on its core offering, and it comes after that $30 to $40 million loss they took in the US when they tried to expand. Now, by selling those, yes, they took a hit, but the market has reacted positively, and you can see that by that halt in the fall of the share price here, and like you mentioned, that rise in volume as price is going up, that is quite positive there. So I think that now it's an interesting time. I'd like to see it at least break above these levels here at around that $21. You can see that there's multiple places here where it found support and resistance. So there's a lot of price agreements and push from these levels. So $21 would probably be the more conservative buy. And I do like the fact that it is, consolidating in a tight range. So we've got that resistance level there, but we've also got this nice little up momentum that's been established. And then we've got this downward momentum there. So it's coming to a precipice right now. It's coming to where price is going to compress, and it's going to have to choose a direction. And whether that is back down to these levels, $16, or whether it breaks above 21, we're still yet to see. But that's the beauty about being a trader. You can just sit back, wait for the price action to tell you where it wants to go, and then just jump in for the ride.
Yeah, it's so crucial. I mean, if you've learnt anything from this show, is interacting when you interact with a stock or price really is everything you need in terms of getting an edge and getting that right setup. That is where the profits come from. If you do want to get an introduction to all of that, please check this book out, How to Beat the Managed Funds by 20% by Dale Gillham. It is free. You just have to pay the shipping. The link is in the description for this video. But let's now move on and get into our next stock, which is Virgin Australia. On the screen is that chart. Now, Pedro, this one, it is Australia's second largest airliner and the owner of the Velocity Frequent Flyer Points. What's interesting is when you look at the chart of Virgin and Qantas, they literally, although Virgin has much less data, they literally are moving together. So if you are bullish on Qantas, having a look at this one here, it also makes, for an interesting reading. And I'll just get into some of or I'll keep both charts open because the weekly is where probably most of the action is. But, some of the keys to success here, the growth in the high margin Velocity Loyal business, which is separate to the airline, and lower fuel prices boosting airline profitability. Now, we have seen the oil price take an absolutely massive dive from those lofty heights at 110 back down to the 70s, I believe, at the moment. And you're probably seeing it at the fuel pump if you're not following the oil price, but it is on the way down. And if oil does continue pre-war in the trend that it's been going, we'll expect oil to continue to fall back below the 60s as well, because we do have, the supply-demand story is bearish, and it has been since '08. So that's something to keep a close eye on. Obviously, another big catalyst, if the market starts valuing the Velocity separately from the airline, you may see another huge value add here and potentially, say the big end of town thinking this one's worth way more than just the IPO price. And obviously, continued profit from growth from the market share from competitors. And right now, when we go and take a look at the share price, what is really eye-opening to me, there's the IPO price there at $3.11. Right now, again, we've seen where the market initially started participating, which was around that $3.20, $3.30. It found a top at that level. So right now, the market, we can be in agreement to say that the market didn't want to pay any more than $3.40. But where we are today, that still offers quite a decent bit of upside of around 22%. And I would say that is potentially from all levels and angles where you may see some resistance, even if you were to follow the momentum on the way up, on the way down through there. But before that, there's a level at $2.99 or $3, something to bear in mind. What's really interesting to me, and a lot of our students that are studying with us would understand, how do these really strong reversal points or bottoming patterns unfold? Well, there are some clues in the way this one's unfolding right now. And we have seen for the first time, if we measure from May 2026 to, May 2000, 26, yes, to June 2026. This is the longest time this stock has really gone for a sustained run, printing higher bases on multiple occasions since the initial euphoria. And you can't really take much from the initial 4 or 5 weeks or month on any stock that IPOs, because that is just hype driven. You got to wait a couple of months, and the statistics do say you can often pick up an IPO 6 to 12 months later for a cheaper price. And this is, a perfect example of that. So just food for thought right now. This is quite bullish. It's trending up. It's breaking highs. We're closing above. $3 becomes a bit of a resistance level, but if it can get through 3, then we might be pushing back into the 340s, 350s relatively soon. And then depending on how strong the market continues to view this one, the all-time high is not, I would say, not unattainable for this, Pedro.
Yeah, look, this was one that we covered when the stock first came out back in 2025 or in June. And we did warn investors of participating in the IPO. So hopefully people did listen, because it did fall quite drastically. Now it looks like it's recovering. However, I am a bit concerned about that $3 level, the way that it's getting towards. I think that it is going to provide a bit of resistance short term. Now, if it does get above that $3, that's a different story, because then we're in a bit of a different range there. And that range would be from that $3 all the way up to that $3.40, which represents around that 13% upside from that break above there. Now, Virgin, it's got a bit of problems at the moment, obviously because of what's happening in the Middle East. Qatar Airways holds a 25% stake in this company, and they've seen a lot of disruptions over there. And also, Virgin has a bit of debt at the moment. So it's fundamentally, it's a little bit hard to gauge what's happening with it. Technically, it does look nice. I mean, we've got higher bases, higher highs. That's typically what you want to see from a stock that is recovering. And the fact that it has broken above that $2.60, where a lot of congestion was happening, it actually failed to break above that level multiple times here around 2026, and now it has managed to break above it. So we're in that kind of middle band here, and that could have a bit of a fall, of anything about that $6 to that momentum and to that bottom range, or it could actually rise to that next resistance at around that 7%. So the risk and reward ratio, you guys will have to figure out whether it's there or not. You could come back to fill this gap as well, where we've got that close at $2.56. So for me, this one is a little bit more danger than the other one. It doesn't look like it's got the momentum really with it. We're seeing volume as well falling away as the stock is rising. So it'll be a watch, but definitely if the oil comes down, if all the problems are worked out in the Middle East, which is a big ask, to be honest, at the moment, then this one could do good. But for me, it's a watch at the moment.
Yeah, fantastic. All right, now let's get into our third stock, because this one I'm sure will get you up and about, Pedro. This is Plenti Limited, or Plenti Group Limited. Now, this one here is a technology-driven lender providing car, renewable energy like solar and that, and personal loans. The key to success is a falling interest rate, reducing funding costs, strong growth in the loan book. And the biggest thing to watch for this is the RBA rate cut cycle, which will improve margins and demand and sustained earnings growth, providing it can compete with traditional banks. Really, all that summarized is it is one of the more pure rate stories, interest rate stories, in terms of what could send this share price up. And right now, the way things are going in Australia, we held the most recent rate decision. All the talk is reversing, that we're going to move into an easing scenario. And potentially, if that is the case, which it looks like right now, this one becomes a must watch. And to me, I'll keep it short and simple, let you take over here, but 66 cents. This has been such a crucial level. That's when the IPO was back in September 20, which was around $1.40. Here we got the correction. There's no more clear evidence of strong buying than what happened in November 23. We held. We didn't pull back into it, which shows you this is serious. It's not just a flash in the pan type buying. It's been over 2 years since we've gone back to this level and tested it so many times and continuously held. And even more recently, look at that, bang right into it. Buyers have picked it up. We're already back up to 78 cents. So I think this one, when you talk about, where do you look for those really once in a lifetime type opportunities? Well, we're at that level again. Whether it happens or not, you're going to have to monitor the stock. And just because we say it looks good right now, we're not saying it's a buy or a sell today. But it's so important that you find those key moments on a stock and then start to formulate your ideas, because you may not get these opportunities for a while again. And so this one for me is at that point. Pedro, if you're happy to take the rest of it away, mate, that'd be awesome.
Yeah, sure. Look, this one's probably the pick of the bunch for me. This is a private credit lender, basically. So you can jump on their platform and lend money out to other businesses or people needing it for certain things. So private credit has actually grown 21% since 2015. So it's it has experienced a lot of growth. Traditional banking is starting to wane a little bit. And we are seeing strong interest in this area. And technically, you can see what's happened in these spikes back here. So we've got 2021, where interest rates were actually coming up, and then we saw an increase in price of this private credit lender. And from 2023 to 2024, when interest rates were again going up, we saw a 400% increase. Now, even though we're keeping rates on hold, and we did have one rate increase recently, maybe it's rumors of a rate cut that's scaring this market a little bit. But either way, it has come back to that very all-important support level at that 60 cents. Now, note that there is a very important ceiling at $1.60 as well. So really take this as that medium term type of trade if you are going to get into this, because if it's just going to be a buy and hold, you might be in for a little bit of a ride, because at the moment, this is not telling me that it's those type of stocks. It is one of those type of trading stocks. And putting a momentum line right down the those peaks there and waiting for a break above seems like the logical strategy here for this stock. Now, the first resistance level that I'd expect it to get to is at $1. $1 has been strong support in the past. It's been strong resistance here in April. So we do have that as the next short-term resistance. That's 20% up to that side, and we've got 20% up to that downside. Again, assess your risk to reward ratio on this one, whether it's there or not. But I think that this has some huge potential moving forward, especially if we're starting to see more and more people move into this private lending space. And Plenti is well positioned to capitalize off that. And now on the weekly chart, we are seeing volume starting to pick up. Have a look at that huge spike in volume on that rise. That is a very nice indication that buyers are starting to be interested. And then when we saw the fall, volume remained quite low. But have a look at what's happened here. This bar right there, this blue bar there, increasing volume, closed on its high. We are starting to move up again now. If this this June low holds, if these levels hold here, I would say at around that 73 cents, then that is going to be quite bullish for Plenti, and especially if it breaks down that momentum. So right now we're holding. It's not behaving like it has been during these down periods. We've held these two lows. We haven't closed below it. Keep an eye on it, because I think that this one could be on the verge of a nice little move.